Hey, what is up, guys? It is Harrison Barron, the One Entrepreneur. Now, in this video, I actually have my buddy Jonathan, who is an insurance expert over with Bradley and Parker in Long Island, New York, or better yet, on Long Island, New York. So, Jonathan, tell people a little bit about what you do. And this whole video is coming because I made that other insurance video where I just give some general tips, but I wanted to have an expert on to teach people.
Hi, Harrison, and everyone, and thank you for having me. Again, my name is Jonathan Carroll. I'm with Bradley and Parker. I've been with Bradley and Parker for about 10 years, and I've been a licensed insurance broker for over 20 years, believe it or not. I specialize in helping business owners with their insurance needs, and those businesses run the gamut. I do write a lot of staffing insurance for staffing companies, but I also write construction companies, restaurants, bars, manufacturing distributors, real estate owners. That's me.
Awesome, man. So in my last video, I talk a little bit about insurance and who needs insurance and small businesses and things like that. So can you tell people, I guess we'll start with the top, like, do you actually need insurance when you start a business?
I'm glad you used the word need. Need is has become a little bit of a trigger word for me. The two words are need and want. And the example that I give is oxygen. If I took your oxygen away, you would know very quickly that you need it. So do we need insurance? It really depends upon what you're selling, what you're doing, what your service is, right? So if I'm going to have employees, I need to have workers' compensation insurance because workers' comp is required by the majority of the states in the United States. And in the state of New York, if you fail to carry workers' comp, you will be subject to a fine of $2,000 for every 10 days you have not carried workers' comp for your employees. And if someone is injured, you could be charged with a felony. So workers' comp is definitely needed if you have employees, kind of like car insurance. You're required to have car insurance. If we weren't required to have car insurance, most people would drive around without car insurance, and it would be really bad when there were accidents. If you buy a building or you buy a home, the bank requires you to have insurance. If you don't, they will repossess the property or they will force place insurance. So insurance is required when you get a loan from a bank. And then another reason you would need insurance is if you lease a space. So if you lease some office space in an office building or you lease a yard to do some work, the landlord is typically going to say, I need proof of general liability insurance. And that's because if someone falls on your property, their lawyer is going to sue him in addition to suing you. So you need to have insurance if you're going to be a tenant. And then another reason you would need insurance is if someone that you're selling your products to requires you to give them insurance in order to put your products on the shelf or to go onto their job site. So if I was manufacturing coffee and I wanted to get my coffee into Kmart, Kmart would require me to provide them with proof of insurance so that if my coffee poisoned somebody, and Kmart got sued, my insurance would defend Kmart and the person who manufactured the coffee. And then another same reason, different example, is if I'm an electrician and I need to get on a job site, I'm going to need to provide the general contractor and or the building owner with proof of insurance before they're even going to let me on the job site to do work, because if I burn the building down, they want my insurance to pay for the damages that I caused. Gotcha. So those are some of the reasons you would need insurance. Then when you come to wanting insurance means, you know, you care about, let's say your business is making you some good money, you start generating some revenue, it becomes that goose that's laying golden eggs. We want to protect that goose that's laying golden eggs. If I'm selling products on my website and people are just coming in there and they're throwing their credit card number in and I'm mailing them t-shirts as an example, I don't need insurance in that scenario. But there is still a chance that one of my t-shirts could cause a child to get a rash in her eye. And that person will sue me and I will need a lawyer to defend me, and insurance will provide me with a lawyer to provide defense. So if I'm making money, I want to buy insurance to cover my basics, even if it's not required by law. So that becomes a want scenario. And generally what I tell people is you should definitely incorporate before you buy insurance. If you're starting a business on a shoestring budget, you want to get that corporation going, because that's going to put the corporate veil between the business and your personal assets, which is going to provide some protection to you. And then you'll add insurance when you're able. So if the ends are meeting and you're making a ton of money and you've raised capital and you have money to start a business, yes, we should get insurance going right away. If you're having trouble feeding your kids and keeping the lights on and there's no legal requirement for you to have insurance, then I generally would tell someone, look, you got to decide if you're willing to roll the dice or not. Maybe that money is safer in your bank account than in an insurance policy to start. And obviously you have to determine what your level and comfort level is for risk.
Sure. So
that's kind of the difference between, needing and wanting insurance.
sure. So can you explain to people the difference between risk, or better yet, what levels of risk people take, and how you can help, avoid risk or manage risk, and then, liability and things like that?
I can go in a lot of different directions with that. There's business owners are all of us are facing risk. When we leave the house, we could be hit by a car. When we're in the house, there could be a fire. We're all taking risks, and we're all calculating the chance of risk at different times as we move through the world in our personal lives and with our businesses. Many types of claims are unlikely to happen, and the cost of insurance hence is much lower. So as an example, with workers' compensation is designed to provide medical and lost pay to injured workers. So if you have a receptionist who sits at a desk and answers the phone, that cost for workers' compensation is going to be far less for that person than for, let's say, a roofer. So as an example, a clerical person, you might pay 15 cents per $100 of pay for clerical, which means at $100,000 in payroll, it'll cost you around $150 for workers' comp for that person. A roofer might cost $30 per 100 of pay, because that guy can fall off the roof, and when he does, his injuries are going to be pretty severe. So the same $100,000 in pay will cost you $30,000 in workers' comp above the payroll. So there are pretty big differences in the level of risk that exists. What I found in my experience is that there are two kinds of buyers of insurance. The first kind thinks that insurance is a complete and total scam and would carry zero insurance if they could. And they complain about every check they have to write and every bill they have to pay, and they just hate us and they hate my industry. And that's the reality, and it's fine. And then the other kind of buyer is someone who is making a ton of money, like sleeping at night. They are terrified of risk, and they're happy to spend money on things, on extras that really will protect them. For example, most businesses are not required to purchase employment practices insurance, which covers you in case your employees sue you for things like sexual harassment and discrimination. Most businesses are not required to purchase cyber insurance, which covers you if there's a phishing attack or social engineering or a malware attack against your servers. Those policies usually are fairly cheap compared to what most businesses pay for their other insurance, yet most business owners don't buy those coverages. My personal philosophy, most people I think fall somewhere in the middle. We have a balancing act. You buy the minimum that you're required to buy, and then maybe you'll stack an umbrella on top of some things or add some additional coverage in order to help you sleep better at night, somewhere in the middle. Because, I could sell you insurance until you're out of money, but that's not my goal, and that's not good either. We don't want to over-insure and be broke.
Sure.
My personal philosophy is there's three things we need to look out for when we buy insurance. First is coverage, second is service, and third is price. Price is third for a reason, and I'm going to tell you why. Very often someone will come to me and say, oh, I own a building and I'm paying $10,000 a year and I want to save money. And I say, well, how much do you want to save? And they say, well, I want to save half. And I say, okay, well, your building's insured for $1 million. If it burns down to the ground, you're going to get $1 million. So how about we just reduce the building value to $500,000? And the guy said, and then I'll save you half the money. And the guy says, but if I have a fire, I'm going to be screwed. And I go, yes, but I saved you half. So that logic obviously doesn't make sense, right?
Sure.
And so the first thing that's most important is if we're going to write the check for an insurance policy, we want to make sure we're getting good coverage. We want to make sure we understand the exclusions and the limitations of the policy, understand the deductibles. And those things are important because a lot of people buy stuff without reading it. And then when a claim is denied or there's no coverage, they say, oh, insurance is a scam. Insurance is not a scam. The insurance companies are trying to isolate the coverage to very specific things. And if something outside of that happens, they don't expect to have to pay for it because they didn't charge you for it, is the general logic.
Gotcha.
Second is service. And that's where I do think that Bradley and Parker and I excel on providing exceptional service. I'm good at explaining things. I enjoy helping people solve problems. So I really think I found my calling in becoming an insurance broker. Very few people in the world who say, oh, me, I want to talk about insurance, but that is me. And then third is price, and price is third because price obviously is a factor. If my coverage is going to cost you twice as much, but it's only 5% better, you're probably not going to go with me. There are instances where I show people want me to save them money, and after I do an analysis of their policies, I show them a lot of deficiencies that I could fix that are important. And sometimes people end up spending a little bit more and still switching their insurance to me because they realize they now have better coverage and they're getting good service, so they don't mind paying for a good value.
That's awesome. Now, for a new entrepreneur or new small business, so when I say a new small business, let's say 10 employees and less, what are some tips, tricks, things that they really should keep an eye out for as far as insurance goes, and kind of seeing what level of risk and liability they're willing to accept?
All right. So the most important thing I would give a new business advice I would give a new business owner is that you have to understand, once you have employees and you buy a workers' comp policy, it is not a fixed price. And that is a common mistake that happens. Someone purchases a workers' comp policy. Let's say it's going to cost $2,000 per year. It's because the broker used the payroll that they estimated at, let's say, $30,000. And that's what cost him $2,000 for workers' comp. When he has a great year and his payroll grows to $90,000, it triples, the carrier, the workers' comp carrier, is always going to do an audit. And then they're going to find out that you tripled your payroll. So they're going to charge you for the increased exposure that they had. And your premium of $2,000 is going to turn into $6,000. And I very often see new business owners that are pissed off in that scenario because the old broker didn't explain it to them, or he did explain it to them and they didn't listen, which happens as well. Another thing I would warn people about is how you're paying people doesn't matter to workers' comp. Workers' comp is intended to be very broad. The state wants to protect workers that are working for your business. And the way they do that is they make the language very broad as to what the definition of an employee is. This is not the Department of Labor definition that people like to throw around. For workers' comp purposes, the definition of an employee is someone that you give money to. That's it. So if you pay someone as a W-2 or a 1099, or even if you pay someone else's corporation, you need to collect. You have two choices: either provide them with workers' compensation or collect proof that they have their own workers' compensation. So if you say your payroll is $30,000 because you have a receptionist that you pay $30,000 a year to, but you pay $1 million in 1099s to salespeople that are out in the field, when that auditor comes in, she's going to pick up all those 1099s and she's going to charge you for all that. And you're going to get an unhappy surprise. And they can look back up to 3 years and claw back all of that premium that they are entitled to. And an insurance policy is a contract. It's a legal contract, and they will use that to go after you. They get their money.
Love it, man. Cool. So let's make this a digestible YouTube video for people to enjoy. Are there any last tips and tricks that you want to, that you think that a small business owner would find really interesting or would find valuable to know before we wrap this up? And I will also be leaving your contact information down below. Thank
you. I just think that business owners need to pay attention to the contracts they're signing. They need to make sure they're working with a broker that's taking the time to explain things to them. I happen to think I'm very good at breaking things down into simple examples and simple. I don't expect everybody to know insurance jargon. That's not your job. That's my job. So the most important piece of advice I would give someone is to find someone that they trust, that's knowledgeable, that takes the time to explain things to them. A lot of times with small business owners, insurance brokers don't want to be involved because the commission is very small. So you got to really find someone that's not paying attention to the dollars, who cares about doing a good job, is passionate about helping you with manage your business. And the other thing I'll say is good insurance brokers typically also have large networks of other professionals. So for me, as an example, I regularly help my clients find IT companies, accountants, lawyers, payroll companies, anything somebody needs, I can help people find it. And I think most insurance brokers do have access to networks like that. It's just a matter of, do you trust your broker as a trusted advisor, as a valuable resource to help you run your business.
Cool, man. Well, dude, thanks so much for hanging out with me. Do you want to tell people how they can contact you, or I'll just leave it down below?
My number 631-650-4034. My email is jcarroll, CARROLL @bradley-parker.com.
Love it, man.
Dude,
thanks for hanging out. All right, guys. My name is Harrison Marin, the Millennial Entrepreneur. If you guys found value in that, you liked it, it's going to help you grow your business, or just, hey, it's going to let you sleep at night. Hit that like button, hit that subscribe button, and that little notification bell. I'll see you guys on the next one. Till then, bye.